So if you've been watching the markets lately, you know Trump's tariff implementations, then sudden 90-day tariff pause sent shockwaves through Wall Street. But what's flying under the radar is something far more concerning. Suspicious stock trades placed just minutes before the announcements. Some of those trades generated gains as high as 2,100% in less than an hour. And that isn't just speculation. That is math that we can actually see in real time, and I'll show you the charts here in a bit. Now, what led to this is Trump's abrupt tariff shift, which gave nearly 60 countries a temporary break, lowering reciprocal tariffs to 10%, except for China, who got hit hard, and their tariffs actually jumped to 125% after Beijing retaliated with its own 84% tariffs. Now, following Trump's announcement of a 90-day pause, the S&P surged to over 9%, its best day since the 2008 financial crisis. History tells us those kind of market spikes are incredibly rare, only seen during the wild volatility of a crisis, like we saw in 1987, 2001, 2008, 2020. All of those have specific events tied to them. So that major change alone is a red flag. But why the pivot? Well, Trump admitted the market's recent downturn spooked him. More importantly, it wasn't just the stock market on his radar, it was the US bond market. Now, conveniently, this pivot came right before a $39 billion auction of a 10-year Treasury bond, which the timing of that alone has people raising their eyebrows. But the real story here is the potential market manipulation. The day before Trump's announcement, a rumor of a tariff pause sent markets soaring, only for the White House to deny it as fake news. This seemed to be a targeted leak to test the market's reaction, because the next day, the actual announcement came, and traders had already made their move as if they were prompted. Trump also sent out a message on Truth Social saying, buy. Now, before I get into what happened, let me explain what an option is. An option is like paying for dibs on a stock market price. So let's say you have information that a pair of Jordans that normally sell for $200 are going to skyrocket to $300 in the next week or so. So you go to the shoe salesman and say, hey, I'll pay you $10 right now if I can lock in that $200 price. And then when the Jordans go up, you can buy them for that $200 price and then immediately sell them for a profit of $90 because they're worth $300 now. If you didn't use the option, that shoe salesman just keeps your $10, or you can sell that option to someone else if they want to exercise it. This is what happened yesterday, only it was in the millions of dollars. Options were placed on the S&P 500 ETF Trust, which is highly liquid and tracks the S&P 500 itself. These options were taken when the S&P was at its lowest. And you can see exactly when they buy the options right here. And then when the market starts to rocket up, you can see when they start to sell them right here. That is unusual to say the least. And what is very surprising is they were set to expire the very same day they were taken. Someone bet heavily that the market would skyrocket in a specific span of a few hours, which is an extremely high-risk move unless you knew what was coming. The result, a 2,100% return on investment in an hour. That's not even remotely normal. That means if someone invested $1 million into this, they returned $21 million on their investment in less than an hour. According to data from Unusual Whales, large call options were also placed on NASDAQ ETFs and leveraged NASDAQ ETFs. This is ridiculous. You see right here, massive amounts of options buying. Starts to rise up, selling the options, and then they continue to sell over time. And all of this was right before Trump's post. And so there's kind of an obvious implication here. Someone with insider knowledge placed those trades and made massive amounts of money. But the bottom line here is the data is clear. Record market surges, suspicious trades, timing tied to the bond auctions, timing tied to taking out options on highly risky trades, and major policy reversals all paint a picture that smells of insider knowledge and market manipulation. Whether this was strategic brilliance or financial gamesmanship is kind of up for debate, but the numbers really don't lie here. Something weird happened, and in this instance, I really don't mind putting that conspiracy theory cap on. So what do you think?